If you are a beginner to day trading or you are interested in just learning but you haven't started yet, I can tell you the very first thing you need to learn is not how to scalp intraday trades, how to look at a 15-minute, 5-minute, and 1 minute chart and then figure out if I would have bought here, I would have made this much money today. You need to understand first your foundation, and that's understanding market structure and how it works. Now, you may be saying, who are you and why are you talking to me about it? Well, I've been in the finance industry for 15 years. My very first job was at a mortgage company working at the lock desk, where all I did 5 days a week for multiple years was look at charts, see trends, spot and identify them, and help these mortgage companies set their risk on their interest rates. So every day for the last 15 years, I'm not doing that anymore, but I still look at the charts every day because now I'm trading. So let me show you exactly how you identify a market structure and what you need to watch for to invalidate these. In classic YouTube content creator fashion, I would be remiss if I did not tell you to please subscribe to the channel. We are making educational content to try and help people get better at trading or just simply learn. And also, the very first link in the description is a link to my free Discord. We don't sell anything in there, we don't allow promotions, nothing like that. It's a good group of people. We've grown it to 1,000 people in there in under 72 hours, and we would love to see you there. But let's get into the video and break down some market structure. So we're looking at NQ right here, and I'm going to scroll up in just a minute after I show you what this chart looks like. So this is how you can identify a bearish trend, a bullish trend, and what consolidation looks like. So let's start off with the easiest one. Let's say you have something that looks kind of like this as the zone that you're working off of. If you look at a chart and you see maybe it starts here and then your highs and lows, your red and green candles, whatever color you use, or something like this, or maybe it pops out a little and comes back. This is called consolidation. Nothing is happening right here that is important because all it is consolidating to figure out which way it's going to break. This actually is the riskiest zone to be in when it comes to trading. If you see a chart doing something like this, you can do intraday scalps if you're good at it, but if you're doing long-term swing trades, you're going to get caught because when it consolidates like this, one of two things happens. It goes boom, way down, or it goes boom, way up. Well, if you're on the wrong side of that and it goes way up and you're thinking, hey, this is going to drop, this thing's going to tank from what I'm seeing, and it goes the opposite way, there goes your account. This is what consolidation looks like. I'm going to show you a bearish trend right now, just so we can break it down because it directly applies to our chart. The bullish trend, you would just flip it. So let's have our starting point, and we're going to have our first drop down. This is going to create our lower low one. So we're going to label it lower low one. Why is it called a lower low? Because we have a starting point, we have a drop, and this creates a new low before it reverses back up. So let's then say we have something that looks like this right here. This creates a lower high. Why is it called a lower high? Because this point before it reverses back down is below our starting point, and since it's below, it's lower than the starting point, so it's lower high one. So I'll label it as such. Now you're going to have a drop down, which is going to create a new lower low. It's this point is going to be below lower low one and below the starting point. So this makes lower low two. I kind of truncate this down a little bit. I didn't realize I was drawing so big. So you have lower low two. Now is what happens is you are going to have some kind of reversal here. It's the market always comes back to meet this point. Wherever it is, it comes back to meet it in most cases with these trends. So it doesn't have to be exactly at it. It can be above it. In the chart we're going to look at, it's actually almost up here. It's almost equal, this rebound, to our lower high one, but it's still below, so it creates a lower high two. Again, it's a lower high two because it's the next lower high below lower high one and our starting point. We have not broke the starting point of this trend. So until one of these breaks out like this and goes above the starting point to invalidate this structure, the bearish downtrend is in effect. So now you see something like this and you're like, I get what you're saying, but where's my entry point? How do I use this information to make money? Well, this next leg right here is the moneymaker leg, because it's an even bigger drop. You create a lower high two underneath your starting point, and the next leg is normally big. So we're going to call this the moneymaker leg, lower low three. This big drop right here, this is what, if you are a swing trader, a long-term trader, you're an intraday scalper that holds overnight, that's not really a scalp, but let's just say you're holding for 2 days or so and you happen to catch this, this is your moneymaker leg. So starting point, lower low, lower high, lower low 2 will come back to meet or exceed lower low 1 and create lower high 2. As long as this does not come up above lower high 1 or the starting point, you have the moneymaker leg presenting itself. That's this right here. It works the same way on bullish. I'll just quickly draw that one so you can see. I'm not going to label it, but if you have a starting point here, higher high, higher low, higher high, higher low, moneymaker leg. It's the exact same as this, except just flipped with higher highs and higher lows instead of lower highs and lower lows. So now, like we talked about right here in the very beginning, consolidation, right? It doesn't know which way it wants to go. The market doesn't know what's going on. It doesn't know what it wants to do. So it's just kind of chopping around. This started on Tuesday, the 28th, and went all the way until Monday, the 3rd. There was no clear direction for multiple days of what was going on. A whole entire trading week was just ping ponging around. Then, right here on Monday, the 3rd, at 6 a.m. Eastern Standard Time, we start to get our trend developing right here. So, to stick to the consistency, this is our starting point. This here is lower low 1. We then get the reversal here, and this creates lower high 1, just like we talked about down below. Lower high 1 because it is below the starting point, and as you can see here from the chart, it reverses down and it creates lower low 2. Then from here, we come up and we create a lower high 2. It's close to lower high 1. It is obviously above lower low 1, but like I said, it always returns or exceeds this point before it makes the moneymaker leg. And then what do you have here? You have a massive moneymaker leg that went from Wednesday, November 12th to Friday, November 14th. In 2 days, you went from 25,805 price to 24,616, $1,200 shaved off of NQ in 2 days. And honestly, this is what I think right here. Let me label this so we have full clarity. Moneymaker, lower low 3. Okay? This, the classic moneymaker leg. Look how many points. It's bigger than any of these ranges right here. This is the moneymaker leg. If you would have been watching this, starting point, lower low, lower high, bang, moneymaker. Now, this is my opinion right here. One of two things are going to happen. This is a fake out, in my opinion. This right here, this movement, look at this. This is on technically 6 a.m. November 14th, Friday morning. We get massive push, massive towards the end of the day. This is what I think is going to happen. You're going to get another big leg like this. And one of two things will continue here. Either I'll be completely wrong, or since Thanksgiving is coming up, people are going to be traveling. This is what will happen. You're going to get consolidation like this. And then after Thanksgiving, we will get either this or we're going to get this right here, which is going to start our bullish trend. This is how this would reverse. If it breaks out bullish after consolidation, you would have higher high, higher low, higher high, higher low, boom, moneymaker leg for higher high 3. We will consolidate, and then this exact path will take place again. You will have a new starting point here, and it will create from your starting point lower low 1, lower high 1, lower low 2, lower high 2, moneymaker leg. The markets are consistent with the patterns and the trends. You can verify this. You can go look at any chart you want to, and you can confirm that this exact pattern will present itself at all times. So guys, that right there is how you identify market structure and how you can protect yourself long-term by learning the education of what the market is doing. If this trend continues, you will be able to map it. If it goes into consolidation, you will be able to map it. Wait for the break. If it breaks bullish, you know how to map it. If it breaks bearish again for round 2, you know exactly how to map it because we just did it. If you have a foundation, you will become a very successful long-term trader. If you just focus on intraday scalps, you're basically like walking into the front door of the casino every time you log in. You have no foundation, you have no long-term structure. It may work for you for 6 months to 2 years, and you may make enough money to retire, and that's great. But if you want to do this long-term, and this is something that you genuinely enjoy doing, you need to have a foundation and you need to learn market structure. I hope this video helped you. I'm going to make more like this in the future, but this is a starting point.